Hello everyone, good evening. I'm Komal Tyagi from Team Taxman and I welcome you all in today's live webinar on GST issues faced by the hotel industry. But before we start, I shall take this opportunity to give a brief about Taxman. We are the leading publisher on tax and corporate laws in India, and with authenticity as one of our founding principles, we strive to offer the users an enriched experience of tax and corporate laws. Our goal is to make the research and compliance easier for the legal community. With our vision to achieve perfection, skill, and accuracy in everything that we do, we have worked strenuously over the years to offer the solutions that will continue to help you grow your practice. Our 6 decades of experience in the domain has helped us to constantly innovate and enhance our services and take the tax practice to a newer height. We have also developed the national website of the Income Tax Department and we maintain it with the help of our technical team and the editorial. I would now introduce our speaker for the evening, Ms. Geetika Srivastava. Ms. Geetika holds an experience of more than 12 years in the field of indirect taxation. She has worked with the leading tax law firms and Big Fours. During her professional journey, she was associated with GSTN for almost 1.5 years and contributed to developing the GST system for GSTN as a domain expert with a prime focus on returns. She regularly writes and speaks on indirect tax matters. A warm welcome to you, ma'am. Now, before we proceed, we have some tips for the audience. Your mic will be on mute. However, you may post your questions in the available chat box. Your questions will be answered by the speaker during the session or after the session, and a copy of the presentation used in the webinar shall also be sent to you in email for your future references. Now, without taking much time, I request Ms. Geetika to address the audience. Over to you, ma'am. Thank you.
Thank you, Komal, for such a wonderful introduction. I welcome all the participants and I thank all of them for sparing their time on a Friday evening when people are looking forward to a weekend. And once we have all closed our yearly filings, people would really want to, take some break and some relaxations after working strenuously for hours and hours. But I really appreciate the enthusiasm with which the participants are coming and joining. So without taking much time, I'll quickly share my screen so that we can start with the session. Is the screen visible? Komal, can you? Okay, yes. Thank you. Okay, so like Komal has rightly put that today we are going to discuss the issues which are being faced by the hotel industry. It's almost more than 4 or 5 years down the line that we have, started with the GST. It's been a long journey where we have learned a lot of things. Many changes, came up. A lot of structural changes were done in the business. There were various rate changes, a lot of representations being made to the authorities to, give certain relaxations or give an easy go to the industry because it was very complicated when it started. However, having said that, there are still certain issues which we see that are either prevalent in the industry is still grappling with them, or they may not be aware of that these are certain situations or an issue which the industry is having, in their system, but they're not aware about it. And when things come up, then there's a department inquiry or any department audit is coming up. It's at that point of time they get to know that, okay, this is something which we as an industry we have not foreseen, or we never thought of, that this is what the department is going to allege at one point of time, or these are the queries that can come up from the department. Now with this the journey that we have gone through, and with our experience that a lot of department audits, with a lot of inquiries, DGGI inquiries, we also got to know that there are certain areas where the department is focusing very much. And as an industry or as a consultant or a professional, we should be aware that this is where the the provisions of GST have to be taken care of. The right provisions, the right interpretations are required to be done so that At a later point of time, it should not come to us as a surprise that I never knew that this was the provision of law. These are the three areas, or I would say broadly three services, which a hotel industry is normally providing. One is a normal accommodation service. We all know all the hotels, they have accommodation services. Then they have restaurants also running within the hotel buildings. Sometimes these hotels are also providing the outdoor catering services, whether within the premises or whether outside, because you may have some, corporate events. You may have some personal events wherein you book the hotel, you book the banquet services. So all this is part of the hotel industry where the hotels are providing the services. I'll not take much of your time in discussing the various rates and all. This is a very settled principle. Over a period of time, people know what are the rates prevalent. Just quickly touching upon that in the accommodation services, two rates are prevalent. 12% if your value of accommodation service is less than equal to 7,500. If it is more than 7,500, then it's an 18%. Then what are the implications of the restaurant services, how the GST is levied on that? If the restaurant services are provided in the specified premises, it's 18%. Specified premises have been defined to be places where the declared tariff is more than 7,500. So when I mean 5-star hotel and all, where generally the tariff would exceed 7,500 at any point and for a day at any point of year, the restaurants which are operating in these hotels and all, the rates would be 18%. Then there are restaurants which are either on a standalone basis or running in the hotels which are having declared tariff less than 7,500. The rate is 5% without ITC. Likewise, outdoor catering services also, there are primarily two rates which are prevalent. One is the 5% without ITC and one is 18% with ITC. Again, the logic is very simple. 18% with ITC is normally in the locations where the hotels are of the category which are more than having declared tariff more than 7,500, or you are a restaurant service provider who is operating within those premises which are having the tariff more than 7,500. But if you are at any other premises, maybe a standalone outdoor caterer or any small restaurants, small hotels, the rate is 5% without ITC. So without deliberating much on these rates, we'll move on to the issues which are being faced by the industry during the while they're providing the outward supply. Now, this is very common service we all are aware of, that the hotels, they provide the accommodation services. The first category, when we see that the accommodations, they are coming along with the breakfast. Very common phenomena. The tariff plan is such that the accommodation prices are taking care of the charges of the breakfast also, which is served as complimentary. Now the question that comes is that whether it is a composite supply, whether it is a mixed supply, or whether it is independent supply. Now someone may ask that why is this even important as a question? It may not be important for those hotels and restaurant service providers who are operating at 18% category. It may be important for those hotels which are having 12% as an accommodation rate, and the restaurants which are running in those hotels which are having the rate as 5% without ITC. So the question comes that whether 12% can be applied only on the accommodation part and the breakfast part can be taken out and put under 5% category. At least for the first case, the answer can never be in affirmative, for the simple reason that in an accommodation services and the hotel services, breakfast is normally considered as an incidental part of the accommodation service, which is complementary to the stay. So first category, I think most of us would agree that it would, if at all, qualify as a composite supply. And therefore, the rate, if at all, has to be applied, it will be of the accommodation service, because naturally, the breakfast which is given as a complementary part of the stay can never be the principal supply. It's always the stay which is the principal supply. So therefore, wherever you see that there is an accommodation services along with the breakfast, the rate which is applicable to the accommodation service, that has to be applied, because breakfast can very easily be said to be an incidental, and someone who would want to argue that breakfast is a separate supply, etc., may not fly in this particular situation. When you come to the second category, we have seen certain plans where a guest would book the accommodation. They will also have the complimentary breakfast, but then sometimes they also book the lunch and dinner. Now the question comes that because the guest is separately booking lunch and dinner, is it a breakup of accommodation and a restaurant service? Because usually accommodation services, when it's provided, the lunch and dinner is never a complimentary service. Breakfast is still a complimentary service. We have seen various 5-star, 4-star hotels where you don't even have an option of taking a accommodation without breakfast. It's normally included. There are certain category of hotels which do provide you this option that you want accommodation with breakfast or without breakfast. But in high elite class hotels, this is normally considered as a complimentary supply. But similar thing doesn't happen with the lunch and a dinner. That is something which a guest, when they are booking the accommodation, they book deliberately that they want to have lunch also, they want to have a dinner also. Now again, here the question comes that because someone is specifically booking lunch and dinner as an optional supply, can this be said to be a composite supply, mixed supply, or independent supply? See, wherever there is a single pricing, you can never argue that it's an independent supply. I think we'll all would agree on this. Now, the question that falls between composite supply and mixed supply, again, wherever your stay and your restaurant both are at 18%, it won't make a difference. But wherever your stay is at 12% and your food, your restaurant supply is at 5%, it's at that point of time, these questions can come into picture that if it's a composite supply, if it is a mixed supply, and in both the situations, if it's a composite supply, your principal supply will always be the accommodation. And if it's a mixed supply, then also the rate whichever is higher has to be applicable. The higher rate will always be 12%. Then what happens? Whether I should pay, treat this as a separate supply or this should be treated as a composite and mixed supply. Like I said, treating this as an independent supply is a strict no, because we have a single pricing for all the three elements, all the two elements for that matter. But whether it's a composite or mixed supply, that would definitely make a difference, because if it's a composite supply, then the nature of supply will be that of the accommodation service. Therefore, the rate that is applicable to the accommodation will also be applicable to your food supply also. Now, where the twist come in this case is that at this point of time, when your accommodation is standalone 12%, because your value of supply may not be exceeding 7,500, but because you include the value of lunch and dinner or breakfast for that matter, if it's taken up separately, then the value of supply, if it increases 7,500, the value of supply is more than rupees 7,500, then you strictly fall under the 18% tariff. I'll quickly just take you back to the main supply, the rate which is applicable on the accommodation services. If you remember earlier, this used to be if there is a declared tariff which is more than 7,500, this was later on changed from declared tariff to value of supply. So now in my case, if at any point of time, my accommodation is, let's say, assuming it's around 7,000. So as of now, my accommodation rate is 12%. Assuming adding breakfast also doesn't exceed 7,500. But if someone books lunch as well as dinner, the value of the entire supply exceeds 7,500. Then what happens? Earlier, which was the stay, the rate of GST applicable on the stay, which was 12%, because of my value of accommodation getting increased due to adding of these elements in the value in the supply, the value increases from 7,000 to, let's say, 1,000 or 8,500, depending upon the value that is attributed towards the food element. Immediately, the rate tariff changes from 12% to 18%. So what is it that is more important for the taxpayers or the hoteliers to take care of is that whenever such a plan is being offered to the guest, either ensure that at any point of time your tariff is such that you don't exceed the 7,500 value, so that you don't fall under 18% slab if you want to maintain 12% category. But if, let's say, due to the business reality and the commercial situation, it is not possible, then you have to be very careful that at any point of time, if any guest is adding these two elements, the lunch and the dinner part of it in the accommodation, you have to be very careful that the rate will increase from 12% to 18% the moment your value of supply exceeds 7,500. So these are the areas where people they think that, okay, what I have to see is only value of accommodation. My value of accommodation is 70 less than 7,500. Lunch and dinner is an independent supply. If someone is asking, that I'm giving it. So that's how not the department is going to assess it. They will simply say that either it is composite supply or it is mixed supply. In both the situation, the value that is applicable will be of the accommodation, because the accommodation carries the highest rate as compared to the restaurant services. And the moment your value in totality exceeds 7,500, they will immediately put it under the 18% category. So this is a very thin line where people miss on to identify that what is my nature of supply. It's just not the separate lunch and dinner and the accommodation. You have to assess this based on the classification, and then accordingly you have to see that what is the rate that is applicable once the value of the lunch and dinner sector is added onto the accommodation supply. Now there is a third category also. Sometimes people, they just book the accommodation when they are coming. The guest books only for the accommodation, and then they later on they may be, they may ask for breakfast also, lunch and dinner also. They may take it separately. Both of these breakfast, lunch and dinner, one thing is very common. Sometimes it's an in-room service, and sometimes you go at the restaurant and bar and you get the food served over there. In this third category, because there is a separate pricing and at separate point of time these services have been taken, very strong case to argue that the accommodation is a separate supply, and the food that I'm taking from the restaurant, whether in room service or at the restaurant which is operating within the hotel premises, these are separate supplies, and therefore these should be taxed accordingly. So again, if it is the restaurant is operating within a high-end hotel having declared tariff more than 7,500, then of course both the rates would be same, 18%. But if your premises are having declared tariff less than 7,500, then your accommodation rate, depending upon the value of supply that you are providing, it would be 12%, and the breakfast and lunch can still be charged at 5% without ITC. So this is something which the hotels have to be very careful of, that whenever any guest is booking these services from them, how the services is booked, at what point of time the booking is done, whether it is at the same time or whether it is at a separate point of time, how the prices are clubbed in such a way, the value, how they are charged. So these things are very important for the hotels to ensure that they don't end up missing on paying the correct taxes. Because sometimes, like I said, the perception is that my accommodation and business restaurants is a separate service. So even if I am, someone is booking it at one point of time, I'm providing him restaurant service. That's not how the department is going to assess them. So you'll have to be very careful how the bookings are being done on the portal, whether your portal or any third-party portal. And accordingly, the tax rates have to be charged on the supplies that are made to the guest over there. Now, the second issue which we see is that there are package events. So just now, we have all celebrated New Year and all. So many restaurants, they organize gala dinners, special dinners. There would be some live performance, a special arrangement would be there, food will be served, alcohol, beverages, everything will be served over there. So till now, we have seen three categories of the services which the authorities have been, assessing these hotel industries on. One is the hotel accommodation, the other is the restaurant, the third is the outdoor catering. The other fourth category, which we have seen where the department is coming forward and creating the issues and the demands, is that these are recreational events related services, which is straight away taxable at 28%. Now, this is very important because most of the time, the way we present it, the way we sell it out in the market makes a lot of difference. What is the customer perception? How the customer is perceiving it? So let's say there is a case that it's a normal cafe where you always have a live singing or a live performances is going on, and maybe just for the New Year's Eve they have taken a special place and they have given a special arrangement and everything, and the food and beverages is all unlimited. It's a fixed price which is being charged from the customers, whether or not you take the alcohol, whether or not you take the food. a fixed package, fixed price has been taken. In such cases, a very good case to argue that this is nothing but a restaurant service, because what the restaurant is doing is only organizing a special gala dinner. The only intention is to give the food, to serve the alcohol, and live performance and all is something which is part of the restaurants in original culture. Normally they have it, sometimes they don't have in the usual, but only for the gala dinner they have organized a live performance and all. So quite possible and very strong case to say that this is not a access to an entertainment event or any special cultural event that for which the tax rate should be 28%. On the contrary, these days we are seeing that a lot of cafes and all, they are selling the events specific. See, for example, there's a cafe in Gurgaon which is selling the tickets for the Sufi nights which are happening over there. Now, when you go and look into this, the entry to these events is on pre-book basis. They take you to a Book My Show or maybe some other platform from where you have to first book the tickets, and then you have an entry. And they may or may not serve food. Maybe food may be over and above or maybe included in the package, depending upon how they want to sell it. Now, this kind of a proposal that is going on, or the way they are presenting. Now, here it's very difficult to say that this is just a restaurant related service and the performance and all is incidental. No, I'm very specifically selling that event ticket because I am selling so-called band or some singer or some celebrity who is going to come. And for that, you need to do a pre-booking before you come to my restaurant. It's not just a walk-in kind of arrangement where you just walk in, have your food and you go, you can just go. And in between, there is some performance which is happening. So this is very important to see that how you are showcasing what you're giving. Normally restaurants, they have live music and all, so they will just display a live music or a live performance by a singer. They will not give any name, they are not selling anyone's name, any celebrity's name. It's just a facility which is available, a more kind of a entertainment sort of a thing which is available within the restaurant premises along with the food. You may do a pre-reservation, but there is no pre-booking kind of a thing. So this is something which can still be associated with the restaurant service. But the latter one, to say that it's just a restaurant service, would be a very difficult case to argue that no, it's not a booking of event, because very clearly you are booking, you're giving the tickets on a different platform to book before you enter the cafe for any other entertainment purposes. So this is where sometimes the restaurants or the hoteliers, they may fail to create a distinction or a differentiation that whether it's a restaurant services or it's a event related services, you have to be very careful that how you are selling it out in the market, how you are presenting it to the normal customer, and how a customer is perceiving it. Because 18% to 28%, for that matter 5% to 28% is a very huge gap of taxes. And tomorrow, if let's say department comes and highlights and says that this is not a restaurant services or which is taxable at 5% or 18%, it's an event related services, you can understand the kind of liability, interest and penalty we may be facing at the future date. So while you are showcasing these things, you'll have to be very careful that whether it's a restaurant service or whether it's an entertainment related service, you need to get it assessed very properly so that tomorrow you don't end up into a situation where you have to pay such a huge tax demand and interest, penalty, etc., which is associated with such demand. Another thing which we have seen is that whenever these gala dinners are happening, it's a single pricing which they take, which they charge, and which includes the alcohol, beverages, everything. Alcohol is outside GST. But practically what we have seen is the people who are selling out these kinds of giving these services, they are paying wherever it's being qualified as a restaurant services, they are paying GST as restaurant services on the full amount. And for the liquor separately, in order to avoid any dispute from the VAT department, because liquor is still considered to be a VAT product and VAT is payable. So they calculate the consumption of the liquor that has been the amount of liquor that has been consumed during the event, and based on that the valuation and all is done, and VAT is also separately paid. Yes, there is a dual payment of tax on it. Someone would say that alcohol is out of GST, then why should we consider the value of GST, value of this alcohol while paying GST on the ticket amount, etc., or the package amount? Practically, it is very difficult for anyone to identify that what is the quantum of alcohol which could be, consumed at a later point of time. So just to avoid dispute with the authorities, both the authorities, people end up paying taxes, both GST on the total amount and VAT on the liquor amount based on the consumption that has been made. I'm getting some question and answer. So the only request is that we'll do it at the end of the session, right? Now, apart from these restaurant related activities and the accommodation related activities, there are certain additional facilities also which we get when we are, taking accommodation. Sometimes the bed is for two people and you have one extra guest. So no one would want to take a separate room for one person. So you normally go and either pre-book or at that point of time, you ask them to give you an extra bed. So for that, extra bed charges are charged by the hotels. Very common question that comes is that what would be the taxability of this? I think there should not be any doubt on this. The extra bed charges is part of accommodation services and therefore should be taxed as accommodation service. Again, the very critical point that needs to be kept in mind is the value of the supply. If while adding extra bed charges, your value is exceeding 7,500, please be careful. The rate of tax will change from 12% to 18%. If it remains within 7,500 category, I think there's nothing to worry. You can continue to charge 12%. So the hotels, when they are providing these services, they should keep this in mind that while adding these facilities, the value of your accommodation supply, if it is changing, the rate of tax will also change. Now then, in some cases, we have seen that various hotels, they provide you free airport pick and drop. So when it's a free airport pick and drop, I think there is no dispute in terms of taxability because nothing is charged from the customers. So the question of paying anything separately won't arise. The question that may arise is that someone is specifically choosing for the airport pick and drop. Sometimes, you go for the booking and then they ask you whether you want an airport pick and drop. You put a tick and then they provide you these services. Then the question comes whether this can be said to be incidental to the accommodation or it's a separate supply. In our view, it's clearly a separate supply because hotels are never, in general, they are not providing these airport ticket services, to everyone and anyone. It is only when you are choosing that you are providing these services. So it can be argued that transportation services is at the choice of the customer. It is never normally bundled with the supply. If it is bundled, then I think no one is going to charge any extra amount for this. And if any hotel is charging separately, then this has to be deemed as a separate supply, and therefore whatever rates are applicable on the transportation service should be applicable on the airport pick and drop, and this should not be clubbed with the accommodation services. Then the last one is the laundry services, spa, salon, etc. These are all paid services that you get within the hotels, but whether these can be said to be part of the accommodation service or not, the answer is no, because these services are never given, as a package to anyone. It's on the need basis. If you want to take a spa, you can go and take a spa. You want to use a salon, you can go and use a salon. If you want a laundry services, you get the laundry services. These are never free services or unpaid services, and therefore the taxability of these services will have to be assessed based on their own applicability. Most of them are at the 18%. So if any any guest is taking laundry service, spa, salon and all, this need not be clubbed with the accommodation services. And also for the purpose of determining the declared tariff or the value of supply, this will not form part of the value of accommodation service. This will be taxed as an independent supply, and therefore the rates can be calculated on their own. Now, after seeing these classification related issues, there are two very specific issues which we have experienced when we were dealing with the hotel industry, which was relating to time of supply. I think we all are aware of the provisions of time of supply, so I will not waste much time in this. Quickly, just to say that if there is a provision of service, you can raise invoice either before or within 30 days of the provision of services, and that's the time when you have to pay the taxes. Now, the first issue which we saw was, which was kind of, in favor of the industry only. Let's say there is a stay of hotel, a person is staying from 29th March to 3rd April. So what happens is that it's a, a crossover kind of a service which goes from one financial year to the other financial year. Now, for the purpose of accounting, because the services have been provided during the period of 21-22, the hotels were paying taxes for this 3 days period in the March also. And when at the end, after the April, when the stay was over in the month of April, 3rd April, and when they were issuing invoice, then that invoice, the total value that was taken in the invoice, again the tax was being paid on the total value. Effectively, for 3 days, the hotels were paying extra taxes. So this is what we found, that there was almost, I think almost somewhere in crores, there was an overpayment of taxes. And of course, if it's a bit during the limitation period, you can go and take the refund or issue the credit notes, or take the benefit. But if it crosses that period, you don't even get the benefit. So effectively, you were collecting taxes only once, but you were paying it twice to the government. So this is where we found that there was a huge saving which the hotels could make after we identified that there's a case that it's an overlapping and you're paying taxes twice on the same period of the supply. So this is something which you have to be very careful about, that whenever there is a overlapping on the period and from one financial year to the other financial year, and for the purpose of accounting, if you are accruing your income and paying your taxes, just to be on a safer side, be careful that at the time of your final invoicing, you adjust this amount that you are paying towards the taxes, so as to avoid the dual payment of taxes. Another issue, this was really not in favor of the hotels, because let's say if someone is having a continuous stay of more than 30 days. Now, normally what happens, if it's a 3-day stay or 4-day stay, doesn't make a difference. You can have an invoice after the stay is over, and you never, supersede the 30 days timeline, which is given under the time of supply provision. But if your stay is more than 30 days, you tend to miss that timeline. So let's say you are staying in a hotel, your guest is staying in a hotel from 5th May to 30th June. So for the period of 5th May, because in the case of accommodation, every day the supply is happening. So for every day, technically, every day the invoice should be made. But because we have that 30 days margin, you have that liberty of raising a single invoice for that entire block of 3 days, 4 days for which the guest stayed. Now, in this case, for the period of 5th May till for the 5th May period, you have to be careful that you don't issue your invoice after 30th June. You have to calculate the 30 days for each day of the stay and ensure that your invoices are raised on time. And even if your invoices are not raised, your taxes are paid on time. Otherwise, you will end up paying, having a situation of delayed payment of taxes and unnecessary inviting the interest implications, which can be clearly avoided if this thing is being taken care of. So these are the two issues which are very critical we found during the analysis of this industry. That one was, of course, in the benefit of the industry, and the other was, of course, not really the way they were doing it was correct way of doing it. Now, the other issue is that many times what happens is that the hotels, they have a barter arrangement with the, say for example, any news agency, that you can come and use my premises, you can stay over here, you can advertise your things, and in response you need to advertise my hotel services, etc. But effectively there is no payment of consideration which is happening. This is where there was again a tax miss which was happening, that it was clearly a barter transaction where the news agencies were providing the advertisement service or a sale of space services to the hotels, and hotels were providing stay services, or let's say accommodation services or food services to these agencies. But because they were offsetting each other for these facilities which both of them were taking from each other, none of them were paying taxes. So this is the case. This is the area where you have to be very careful with any such kind of an arrangement is happening, that you do for me and I do for you and we don't pay each other. It's clearly a barter transaction, and therefore you need to do the valuation of the supplies, that at least what you are doing, forget about what the other party is doing, at least your supplies that you are doing, you need to pay taxes on that. Whether or not you charge from the other party is a commercial terms between you and them, but for the purpose of GST, this supply is clearly a supply on which the tax needs to be paid. So this is one area which the people were thinking that there is no consideration, therefore there is no supply. There is a very specific rule in the GST that if there is a barter, even if there is no exchange of consideration, the taxes have to be paid. And then the valuation principles have been provided in Rule 27, how to value it. Now, this is very interesting area. I think most of us would be aware that various hotels and all, they operate through various agents and who help them out in selling the inventory. Now, when I talk about the agent, there could be some physical agent also, and there could be some e-commerce operators and all. What happens in this situation is that inventory of hotel is given to the agent, and agent is, let's say they are displaying or selling it out to the customer and all, and there is an amount which is agreed between the agent and the customer. But what hotel collects from the agent is, like in this example, the accommodation is given to the customer at 7,000 and hotel charges only 5,000 from the agent. Now, what happens in this situation is that what is the value on which the hotels need to pay the taxes? As a principle or as a relationship, hotels, they charge invoices from the customer with 7,000 only. So someone would want to say that, why 7,000? Hotel has got only 5,000 from the agent, therefore they should pay taxes only on the 5,000. Of course not, because agent is a person who is an intermediary between these two parties. How the money is flowing, how it is collected, and how it is being set off is between the hotels and the agent. Because quite possible the 2,000 rupees that is being retained by the agent could be in the form of Hello, is it audible now? I'm sorry, there was a power failure over here, so it got disconnected. Yeah. So the issue that comes over here is that whether the hotels have to pay taxes on 7,000 or they have to pay taxes on 5,000. Clearly, the services that are being provided by the hotels is definitely taxable under as a hotel services, and the amount that is being retained by agent is the amount of their commission. So the value of the services that is provided by hotel will always be 7,000. It can never be 5,000, because that's just a setting of arrangement between the hotels and agent. And sometimes we have seen that hotels, they inadvertently pay taxes only on rupees 5,000 that they have collected from the agent, and forget about the 7,000 amount on which the invoices have been raised. So this is something which is very important. Hello, am I not audible now? Chirag is saying that there is no audio, or I think video, something is missing. Okay, thank you so much. Friends, I'm very sorry. There was a power failure. That's why I got disconnected for a few seconds. I think it's fine now. So this is something which has to be taken care of, that when you are dealing with the agents, the value that on which you are raising invoice on the customer is the value on which the taxes have to be paid. So don't, as a hotelier, just because you're receiving 5,000 doesn't mean the consideration is 5,000. The consideration remains to be the 7,000. Agent is only an intermediary in between, and accommodation services are provided by hotel, and therefore taxes have to be paid on the entire 7,000 rupees. Now, coming to the next issue. This is very, a very structured issue, but I wanted to touch upon this for the reason that sometimes department is coming up and raising certain queries on the arrangement between a brand owner and operator and a hotel owner. So what happens is the brand owner, they have brands, they have all the skill sets of running a hotel, and they know how to operate and manage these hotels, but the building etc is being owned by the third person or some other person. So that guy is known as the hotel owner. All the licenses, all the permissions etc are taken by the hotel owner. Now this brand owner, his role is only to operate and manage the hotel, but in all senses it is the hotel owner who is the let's say the owner of the accommodation or the premises. Now what the department comes and says, they say that nothing doing, it is this brand owner who is the one who is providing the accommodation services, therefore he is the one who should pay taxes under the accommodation or a stay category. This is a very wrong interpretation. Very clearly, if the owner is the one who has the licenses, who invoices the customer, who does all the compliances related, whether it is FSSAI compliances, whether it is shops and establishment compliances, whether it is any other license, let's say of taking liquor, etc. When everything is done by the hotel owner, this guy is only providing his expertise services. He may be managing, he may be operating the hotel, he may be even licensing the brand, but that's the only limited services that he's providing. So his services can be of hotel management services for which he can charge the taxes depending upon his status, but the accommodation services are still provided by the hotel owner. And this is a dispute very commonly raised by the department, and I think clearly defendable if all these conditions are being taken care of, that the licenses and all the ownership etc is of the hotel owner, and this guy is only giving his expertise and his branding licensing services to the hotels. Now, this is a very common issue. I think it's being taken up with all the industry people after the Supreme Court judgment of Northern Operating System of the Manpower Supply. A very unique arrangement that exists in the hotel industry is that while the premises, the infrastructure, everything is owned by the hotel, and the maybe lower level staff is also owned by or is on the payroll of the hotel owner, there is one key managerial person, or let's say a manager kind of a person, who is who is appointed by this brand owner or this operator, because he knows how things have to work. And this person, though he might get his salary and perks from the hotel owner, he strictly reports to the brand owner and operator. This hotel owner can have general communication, but he cannot take any reporting from this key managerial person. So in this case, what the hotels have been arguing, that we are paying him salary, he's our employee and all. So department was alleging that this brand owner is giving manpower supply to the hotels, and the money that is being given in the form of salary and perks is nothing but a consideration. I think somewhere in the core, if you go by the provisions of the law and the arrangement that is between the brand owner and the hotel owner, the contention of department has some waters to be, water to hold, because when this person is only taking salary and perks from the hotel owner, He is not even on the payroll of the hotel owner. He's on the payroll of the brand owner operator, and he's strictly reporting to the operator, the brand owner. Then he is nothing short of a manpower supply. This is a clear case that it's a special person who is being put on the hotel premises to run the show because of his skill sets, because of his experience that he owns from the brand owner and operator. That's why he is running the show, and anything that happens within the management and the running and operation of the hotel, he is going to report it to the brand owner and not to the hotel owner. So to that extent, I think the contention of the department that this is not an employer-employee relationship and it's just a manpower supply, it stands correct in their sense, unless until it can be proved that this manager person is on the payroll of the hotel owner and is reporting and also is happening to the hotel owner, which definitely doesn't happen in this case for the reason that the entire hotel industry is running on this and business structure, that this special person, this manager or a general manager kind of a person comes from an expert background who runs the hotel and he knows how the hotel has to be operated. Now, moving towards the inward supply. We are all aware about the provisions relating to ITC reversal. I will not touch upon the basics of the provision of law. We know Section 16 allows us to take the credit. There are certain restrictions under Section 17.5. Section 17.2 talks about the proportionate availment and reversals of the credit. Then the reversal formulas are given under Rule 42, 43. We'll not get into the details. What I'm going to get into the details is a very specific situation, that what all are the areas where we need to be careful of either taking credit or reversing the credits. First one, I think it's a very clear scenario that if a restaurant is serving liquor is outside GST. So anything which has any linkage with the liquor, whether direct or indirect, the credits won't be allowed. What kind of an expenses can be exclusive to the liquor business is the apparels and the clothes of the bartender, the bar menu, any food, etc., which is served within the bar area, the storage area where the liquor is stored, any specific services which are provided with respect to liquor business. Say, for example, someone wants to know that whether GST is payable on liquor or not, or whether so and so product is the credit is eligible or not. So all these are very exclusive to the liquor business, and straight away the credit should not be allowed. There could also be certain common services, like there could be some restaurant services which are at some capital goods which are being used at the head office, from where the billing is happening for both the liquor and as well as for the other services. Any telecom services, storage, furniture, any other traveling expenses. So common expenses could be there in the business, because if a hotel is run within a premises and having both types of supplies, taxable as well as non-taxable supply, so to that extent, proportionate reversals have to be made. This is something which the hotels they tend to miss, and therefore again resulting into huge demands of reversal at a later point of time. So you'll have to be very careful. Anything which is exclusive to liquor, no credits at all. Common credits have to go through the reversal procedure, and therefore only which is eligible, attributable to the taxable supplies, the credit should be available. Now, this is a very tricky scenario which we often see in the hotel business, is that the tariff keeps on changing. Why? Because it's a peak season, so your tariff may even go beyond 7,500. But if it's an off season, it may be less than 7,500. So definitely your rate of taxes would also change. More specific to the restaurants which are operating, because the rate of taxes which is applicable to the restaurant is linked to the premises where they are operating. So if you're operating in a hotel where the tariff keeps on changing, so your supplies rate will also change from 5% to 18%, 18% to 5%. What you have to be careful about is that at any point of time when your rate is changing from 18% to 5%, 5% is a rate without ITC. So therefore, any food product, any capital good which is being used during this period, any food items, stock material which is in stock, you need to do the reversal as per the provisions of the law. I'll not get into the calculations because that is a separate, time-taking session which can be taken up at a later point of time. But just to give you a sense or flavor of it, that this is how it has to be done. That if you're moving from 18% to 5%, then you need to do the reversals. And if you're going back from 5% to 18%, then you can again, say for example, any food item which is there in the stock, you can re-avail the credit of the item which is lying in the stock to the extent of credit which is attributable to this kind of a supply. So this is a cycle which keeps on going, and a very common practice or a prevalent situation in the industry. So you have to be very careful about that. Now this is very common, scenario which we see that in hotels, that auditors, they come and they audit the hotel, they do for the audit and all. Of course, you don't charge them for the stay that they are enjoying stays in the premises. Then sometimes as per HR policy, employees, if they are traveling, they get free stays at the hotel. Some travel bloggers, they come, you give them free stay or you give them free food, etc. Some key managerial persons are traveling. During COVID, doctors and nurses were given the benefit of free stay and free food, etc. So in these cases, the question comes whether the ITC should be allowed or not. See, in our view, all these activities are done in the course of business. So short, as per section 16, there is no denial of taking the credit. The only question that comes is that whether can someone deny the credits under section 17(5), because if it's a good for personal consumption, or it's food that is lost, stolen, destroyed, returned, or etc. In our view, these provisions would not be applicable for such kind of a consumption which is happening, and the credit of the services or any activity which is available in this case consumed for the purpose of these supplies which are happening, for the stay of auditors, for the stay of the employees, travel bloggers, or their food, etc. This should all be allowed, and there should not be any restriction of the credit. No doubt department is going to rate this dispute, but I think it's a very strong case for anyone to argue that this is not covered under any restricted clause under section 17(5). Therefore, under section 16, the credit is clearly allowable to the company. The last issue, very celebrated, judgment of Safari Retreat, but it's still pending before the Supreme Court. Whether the ITC of the construction related services or the goods which are used in construction should be available or not. Till now, the High Court has given that it should be allowed, but we are still waiting for the Supreme Court decision. So at this point of time, what should be done as a practice? What you can do is that, because it's not a clear cut decision if it's eligible or not, if you take the credit tomorrow it is denied, you face the repercussions of ITCs and penalties. So if you are looking forward to any such huge credits which you are missing on, you can at least take the credit and either not utilize them or reverse them, because I think after section 53 being amended, it's good to have take the credit and not utilize it. But if you feel that that can be very difficult situation, you can avail it and reverse it. So at least you can at later point of time, if there is a favorable decision from the Supreme Court, you can always re-avail this credit. I think with this, I have covered all the key issues. There could be some smaller issues, but these are major issues which we see that the industry is dealing with. And we can now start with the question answer sessions. I'll first go into the chat category. Santosh ji has asked that in case of hotel agent example, since hotel is receiving considered final, can you please explain why 7? Sir, because the role of agent is only to act as an intermediary between the guest and the hotel. Now, what the services that the agent is providing is in the nature of intermediary services, but what the hotel is providing is in the nature of the accommodation service. So therefore, wherever there is an agent in between, the taxes have to be paid by hotel on the total value of the accommodation services. And this agent will pay, let's say in our case, 2,000 was the commission that was being retained by him. He will pay taxes on this 2,000 amount. So from the hotel's perspective, they have always given the services of 7,000 rupees, they will also issue the invoice of 7,000 rupees. Therefore, taxes also have to be paid at 7,000 and not 5,000. Okay, Rajesh ji says if accommodation bill and breakfast billing separate, and if accommodation bill below 5,000, breakfast 4,000 and sir, yes. In case the billing is separate, let's say at the time of booking, you did not choose the breakfast plan, and later on you go and take the breakfast, then what you have written is correct, that the accommodation bill is below 5,000 can be taxed at 12%, and the breakfast can be, see, if it's a accommodation is 12%, then the breakfast will be 5%, and if the accommodation is 18%, then breakfast will also be 18%, because the restaurant which is operating in that category will always have a higher rate of taxes. Sanjeev ji says, can we pay 5% restaurant output liability through credit ledger? Or no, restaurants have been restricted for the ITC. 5% the ITC is not eligible. So anything which is coming as an ITC to you is a cost to the company. Can indoor banquet service not within a hotel be charged at 5% without ITC? This can be if the banquet service is different. If they are giving it along with the food or without the food, I don't know. If it is only renting of space, then it's 18%. There is no 5% rate for the banquet people. And if it's an outdoor catering kind of a service, yeah, if it's a banquet along with the outdoor catering, then if the service provider is a person who is either a hotel which is having a tax of more than 7,500, or a supplier or a restaurant which is operating under such hotels, then the rate will always be 18%. And if it's a, let's say, an independent caterer who's not having either operating within such premises, then he can go for a 5% rate. So if you see the rate chart, there's a category of 5%, but he should be of that specified category of a supplier. Can restaurant service provider take ITC on capital goods because ITC? Yes, sir. It's allowed. It's allowed. In a five-star hotel, if liquor sold and service charges charged on same, clarify whether GST is levied on service charge or not. So liquor is outside the GST. So once the service charge is clubbed with the liquor, in our view, it should form part of the composite supply or incidental to the liquor supply, and therefore they should not charge GST on this. But I think it's a varied practice which is being adopted. I need to check that some people are charging GST. Technically, this should only be outside GST because service charge for liquor is charged in that bill, and liquor bill is always subject to VAT, not GST. Therefore, any complementary services or whichever they are giving should be clubbed with the liquor services only. Most of the hotel are charging GST but not showing the invoices on GST portal. And in case of booking through OYO, we are not able to get the proper GST invoice. So for this, you need to touch base with the OYOs or Make My Trips or Booking.coms and check with them, because these guys are only intermediaries in between. OYO is a very separate kind of arrangement. They own the place and then they run the hotels. As compared to hotels, if you talk about the other agents in between, they are only selling the inventory of some other person. But in OYOs, there can be both the situations. They may be giving the inventory of some other hotelier, or they may be giving their own inventory. So if they are not giving you proper invoice, you can always ask for it and they will provide it, because most of the people are not interested in these invoices. They may not take it. But let's say if you are in a company and you are, traveling for the business purposes and all, you give the GSTIN number, they give you the invoices. That's not a problem. Banquet halls along with food and decoration services means bundle what tax rate? It will be 18% because it will all be, renting along with food, decoration, everything will go under the composite supply, in which your this thing will fall under 18% only. And in fact, in these cases, we normally suggest the clients that if it is possible, They can separate the food bill and other bills, because department will assess this as a composite supply of a event management service or a event arrangement services, and they will put it under 18%, where there's a possibility of having food at 5% rate without ITC. You can have a separate food bill and let the other bills be, because for others tax rate would remain 18%, but only for the food it's 5%. So you can have a breakup of the bill and you can charge taxes accordingly. ITC is restricted. Just could you please clear whether payment of output from credit line is on? Sir, if ITC is rejected, restricted, how will you pay the tax from the credit ledger? The meaning itself says that you cannot take the ITC. The ITC itself would not be allowed. You cannot make the payment from ITC ledgers. ITC is available on renovation expenses incurred in office building, provided these expenses are not capitalized, very specifically mentioned in section 17.5. Chirag ji says they are charging 5%. Who's charging 5% in what case? Banquet halls along with coupon. Fine, if they're charging you 5%, it's good for you. But otherwise, it's a disputable. Department will definitely come and assess for the 18%. Till the time department is not asking, it's fine. But yes, the exposure is there, because when I'm booking a banquet hall, I cannot say that banquet and decoration is incidental to food. Everything has its own relevance. And when I'm going for a banquet services or any this kind of a service, they would simply say that it's an event management kind of a service or a cultural event sort of a thing, and therefore everything should be taxed at 18%. Yes, if they're charging 5%, then there is no ITC provision for 5% rate, whether you call it restaurant services or whether you call it as an outdoor catering services. But this kind of being can be disputed by the department, because they are providing you banquet also, they are giving you decoration also, unless until they there is not something to say that banquet is nothing is attributable toward banquet, but very difficult to prove. Ground level pay, this is very clearly identifiable that if this area or this banquet or this location is also being given on rent, so department will definitely come up with 18% category. We are in ticket booking agent service to corporate clients, including rooms. When we book the same through makemytrip.com, when we are making payment directly to makemytrip.com, they are issuing invoice directly to us, but client wants to avail ITC. What is the solution for this? See, when MakeMyTrip is issuing you invoice, number one, they will issue you booking voucher. If any invoice is coming, that invoice will come only with respect to their service charges or the convenience fee. If you want to have the invoices of the hotels or the airlines, you can ask from them that we want an airline invoices, because as on date, what is the best to the best of my knowledge, the MMTs and the Go IBOs of the world, they are asking you to give your GSTI numbers if you are corporate, and then they will issue you the invoice. If MMT is giving you the airline invoice, etc., in their own name, very well and good. Normally, they don't give it in their own name, because airline services and hotel services are provided by the airlines and the hotels. These guys are only intermediary or an aggregator in between. They don't provide these services, so they don't have any right to charge you the taxes as the services. What will be the GST rate in case of marriage ceremony and higher bank tariff? So this would depend upon the service provider status. Because if, let's say, you are taking a premises which is having a tariff below than 7,000, but the person who is coming from outside, let's say the caterer is coming from a place from where he is operating at 18%, then he will still charge 18%. But if, let's say, your tariff, you're having the ceremony or this activity in an hotel which is having tariff less than 7,000, and the banquet and the food, etc., is also provided by them, then yes, of course, the banquet hall per se is taxable as 18%. But at the rate of but in case of the outdoor catering, Yes, if it's a separate bill, you can still claim for 5% charges. But if it's a single bill, as I said earlier, the department is going to come down heavily with the 18% demand, because it's simply not just a catering services. It's a composite service in which a little more treated like a bank mixed supply, in which the highest rate of supply would be the banquet hall services. GST applicability on cars hired for the purpose of pick and drop RCM to be remitted. Yes, if it's a rent-a-cab services, the RCM is applicable. I think I should take some questions from question answer session also. A lot of questions have come in the chat box only. Rashi Jain, she is asking, can cigarettes be sold in a restaurant 28% and ITC be taken if restaurant is paying taxes at 5% without ITC? See, this is again an issue that cigarettes are being supplied as a separate, non-GST product. So it can be sold at 20%, and a restaurant is paying taxes at 5%. That is quite possible. Reason being that the place where these guys are operating could be a location where the tariff is less than 7,500. Therefore, because of that, the restaurant services is at 5%. But since cigarette and all is a separate supply, and for that matter, why cigarette only? Even the alcohol and all is served at these premises. They are separately charged at, alcohol is charged at the VAT rate, and cigarette can continue to be charged at 28%, because it's a separate specific service which is supplied. Can they sell cigarette as separate books are maintained but GST number is same? Separate books are maintained but GST number is same. That won't make a difference, because when you're making supply from single GST, if you're maintaining separate books and all, that won't make enough of difference. It's more important that the GST number that you're using for selling it's relevant. There's an anonymous attendee. 7,500 is one day or all day? One day. It is clearly mentioned that the declared tariff or for the purpose of value of accommodation, it should be 7,500 per day. Some booking received 8,500 AI. So what is GST? It will be 18%. I hope what is AI, I don't know, but I think it's more with respect to accommodation only. If the hotel is having two set of room, one is having above 75 and other is below 75. See, for the accommodation service, now what is important is the value of the supply. So if they are having the rooms of less than 7,500, those rooms will be taxed at 12%. If they are having other rooms of more than 75%, those rooms will be taxed at 18%. So for the accommodation service, it is based on the value of supply. But for restaurant service, what is important is that if they are running in a premises or a hotel which is having declared tariff more than 7,500, then irrespective of the fact that other rooms are less than 7,500, they'll have to fall under 18% category. What is the status of output liability in case of free supplies? I think needs to be validated in case to along the valuation. Free supplies is again depends on what you're giving, because if it's something which is incidental to your main supply and any kind of an FOC which you are giving, you'll have to see that whether it can fall under the restrictions under section 17(5) very specifically, because anything which is given free of cost, you have to do the ITC reversal. But something which is clubbed with the main supply, which may so to be called as a free supply, but it's actually not a free supply, then the rate which is applicable to the main supply should be applied. Mr. Viral, he says, providing a party plot of wedding and any such event along with food service and consideration charge based on per food place. What is the classification of this? Sir, again, I'll repeat that while people want to say that this is only, food supply or a catering services, depending upon the status of the supplier, whether he's falling under 18% category or 5% category, but because there is a clubbing of giving the plot also along with the food, or let's say banquet also, department is asking 18% on the total supply, because for them each element is equally important. You cannot say that plot is incidental, or the banquet is incidental, or the decoration is incidental. Someone who's booking the hall, he wants the plot also, he wants the hall also, he wants the decoration also, he wants the food also. So keeping everything in mind, department asks for 18%. And that is where we sometimes suggest that if you want to, if it is commercially feasible for you, you better break the food bill and the renting bill, so as you can say that food was taken separately, renting was given separately, and therefore for renting and decoration you can go for 18%, and other things you can, for the food, if it is falling under the 5% category, go for 5%. Otherwise, in a situation where everything is 18%, this won't make a difference. Like if you're having any a ceremony or any event in the 5-star hotel, then whether it is accommodation service, or whether it is banquet service, or whether it is restaurant service, everything is at 18%. So this will not make a difference to those people. It will only affect people who are operating in 12% and 5% category. Himanshu asks, is GST chargeable on homestay, bed and breakfast? Yes, hotel accommodation definition is very wide. It includes even the guest houses, the bread and breakfast. So if this is covered under the hotel services, for that matter, is in terms of the accommodation category. What if the marriage ceremony? I think the same repeated questions. Snack short eats is sold over the counter in hospital for outpatient MRP product. Should this be a supply of good, or is it a restaurant service? No sit out place or anything. See, if anything is over the counter sale, then you can't say it's a restaurant service. But let's say you talk about the Haldirams and all. Today you go to Apollo and big hospitals, they are having Haldirams outlet over there. So if you don't have any dining place, you can very much argue to say that we are not providing restaurant service, because for restaurant you need to have a sitting place, someone should come and dine in and other things. But if it's just an over the counter sale of packed products, then it should not qualify as a restaurant service. So taxation provided to SEZ customers, that depends on the nature of services, because if your place of supply is outside SEZ, I think it would not make any difference, because accommodation related services are location of the property. Mostly all of them would charge POS of the same state. Liquor is still, yes, liquor is still taxable under VAT. It's still not covered under GST. Till the time it's brought under GST, state VAT is being collected, state excise and VAT is applicable on this supply. I think we have taken all the question. Any more question? I was seeing some hands raising. Komal or anyone from Taxman team, if you can highlight if anyone is missed out.
No, ma'am. I think we have done most of it. So
yeah. And even otherwise, if someone has any extra questions, you can mail it across to Taxman team. We can take it up separately if someone has missed out to anything.
Of course, ma'am. Yes, ma'am. So can we wrap it up now?
Yeah, I think we have almost overshot by 5 minutes. So yes, let's wrap it up.
Thank you so much, ma'am, for this wonderful presentation. We really appreciate the subject matter and the way you precisely explained it to the audience. I also sincerely thank the participants for being so cooperative. Thank you all for taking time out of your busy schedule and joining us in this session to make it a success. Though ma'am has tried to reply to most of the queries raised during this session, yet in case you have any further questions, you may please send them to us in writing at sales@taxman.com. Thank you all once again. We shall soon be back with another vital topic. Till then, stay safe and have a great time. Bye-bye.
Thank you. Thank you so much.